In Kenya, you start paying taxes from day one. They don't have that gap. I'm trying to remember that name, but they don't have that season or session where they, for startups, that gap for not paying tax. So from day one, you have to ensure you put aside money for taxes. If you can open an account uh, for taxes, it will help you in the long run. And this one, I am telling you from my bad experience of how I handled taxes. And I got very bad advisors who used to tell me, just file nil returns. And by then, there was no e-teams, there was no iTax, everything was manual. You you write in a book. We used to do our returns using booklets. We used to get booklets from KRA, and then we would put in, we do the calculations and do our returns with those booklets. But now things are much easier. So what you ensure, if you are paying VAT, if you're paying VAT, because for me, I started paying VAT from day one. I was dealing with businesses, and with B2B, the VAT factor is very crucial. It was very crucial for my clients. So I started paying 16% VAT, and I started paying 30% corporate tax. So that is 46% of your income goes to tax. So that one you should know from day one. You work 100%, 46% is a sure bet that it's going to taxes. So if you can put 46% of every income that comes in, if it's 1,000, you put 46% of the 1,000 in a different account. In the long run, when you are doing the tax math, when you're doing your return and you have to make payment, you will dip into that tax account to pay your taxes. But this will save you later. As you go on with your business, it will save you in terms of penalty, in terms of fines, which I was never told. And I paid it the hard way, because when they come to audit they come to audit your account and they discover you've not been paying taxes, you are in for it. But if you have records of everything that you do, if you have records of income, records of expenses, and record of loans and the taxes that you're paying, it makes it even easier for you to explain to them that this is the money that I owe you. But without all these records, it will be trouble for you. You know what they do? They come into, they ask for your statements, your bank statements. They do 46%. They don't care whether it was a loan. They don't care whether somebody gave you the money. They do 46 of the amount in your account, and you pay that amount to them. And that is very expensive. So from day one, taxes should be key.